A trend line is a straight line that connects two or more price points and then extends into the future to act as a line of support or resistance. A minimum of 2 points can be used to draw a trend line, but when more than 3 points are used, the accuracy of the trend increases and the trend line easily doubles up as support and resistance lines. If your trend lines are drawn properly, then price action will stay within the bounds of the upper and the lower trend line, with the upper trend line acting as resistance and the lower trend line acting as support. If you haven't already done so, do please take a moment to subscribe to my channel so you can get similar content as soon as I upload them to help you on your trading journey. I would also appreciate a like. The first reason we use trend lines is because they can act as a form of dynamic support and resistance, meaning support and resistance that is based on the current price action. The second reason why we use trend lines is because they can signal a possible trend change. Now, the knowledge of an impending trend change is really good for a trader because it can help you adjust your positions accordingly ahead of the changing direction. If you want to know a little more about trading with reversal patterns, then be sure to watch the video that shows up on the top right of your screen. Trendline trading will only work in a trending market, and all this means is you want to always trade in the direction that the market is going. So we need to wait till we have either an upward trending market where we're making consistent higher highs and higher lows, or a downward trending market where we're making consistent lower highs and lower lows. In a sideways moving market or a consolidating market where there's no obvious up or down trend, then this trendline trading strategy will not work. Trading with trend lines is used in combination with price action and can be done in two key ways: trading within the trend and trading reversal patterns. So let's start with trend trading. The very first thing you want to do is to go to your daily chart and mark your areas of support and resistance. Next, you want to identify the trend and mark it with your trend lines, connecting the highs and the lows. We can enter into our trades at the bottom of a trend line, but then there's no certainty that price action will continue upwards, since the upward move could end up being a fake out. Entering into a trade when price action breaks above the trend line as well as a line of support increases the likelihood of further upward price movement. So to recap, trading trend lines involves 1. Identify the trend. 2. Draw support and resistance lines on your daily chart. 3. Draw your trend lines on your lower time frame. 4. Enter into your trade only when price action is above both the trend line and the line of support. In this second part, I will show you how to trade reversal patterns using trend lines. You need to look out for key candlestick patterns that form right before the breakout on a trend line. Now, there are so many different candlestick reversal patterns out there. So for more information on reversal patterns, watch my detailed video, which shows up right above. But in this video, I will show one of the more popular reversal patterns, which is the double top or the double bottom. In this chart, we see a classic double bottom, and double bottoms always occur at the end of a downtrend. Now, with a double bottom, we'd normally wait to enter into our trade when price action breaks above the white neckline. In this situation, trading with the trend line, we'll be waiting to enter into a trade when price action breaks not just above the yellow trend line, but also above the white neckline. Doing this helps increase the accuracy of our entry and ensures that we come away with profit. So to recap trading reversal patterns with trend lines, first we need to identify the trend, then draw the trend lines. Thirdly, we need to draw the neckline of the double top or the double bottom. Next, to go long, we enter into the trade when price action is above the neckline as well as the trend line. The opposite is the case with going short. We enter into the trade when price action is below the neckline and the trend line. Well, that's all, folks. I hope you've learned something from this video. And if you have, the only thing I ask is that you hit that like button, comment below, because I do use your comments to better inform me of what other content to create. Share with your friends and family. Make sure you subscribe to my channel, but most importantly, don't forget to hit that notification bell. That way you get my videos as soon as I upload them. And I'll meet you in the next video.